Order blocks are not simply support and resistance levels. These are some SMC indications, smart money indications. As a retail traders, we try to follow the footprints of smart money to get some good trades. That's why these order blocks indicate that smart money has executed trades either in bullish or bearish side, and we try to follow them. What are the order blocks? Order blocks are basically the areas where smart money execute their orders. Because of the huge orders, price moves quickly from there, and at that point we can see the displacement in price. That displacement and that quick move in one direction indicates that smart money has entered in the market. So on the basis of price move, order blocks can be divided into two types. One is the bullish order block here, and the second is bearish order block. So first we will be discussing the bullish order block. What is bullish order block? Bullish order block will form at the end of bearish move when price moves to the downside and the downs and reaches an ICT PD area on the higher time frame. Price reverses from that area. When the reversal happens, the last bearish candlesticks, which is engulfed by the bullish next bullish candlestick, is marked as the bearish order block. Last bearish candlestick before the bullish price move, which was engulfed by the first bullish candlestick, is marked as the bullish order block. Now, what does it mean by the last bearish candlestick engulfed by the first bullish candlestick? I have a drawing here. You can see we have a bearish trend here. We have 1, 2, and 3 bearish candles, and we can say this is the last bearish candlestick. Now, this is the first bullish candlestick. You can see the first bullish candlestick has closed above the high of previous, means last bearish candlestick. Now this means that the last bearish candlestick has been engulfed by the first bullish candlestick. Now when it is engulfed, this candlestick with the wick will be marked as a bullish order block. We can say the this first bullish candlestick, large momentum candlestick, indicates that smart money has entered buy positions here. That's why we will try to follow them. If price goes up then comes back to this order block, we will try to buy from here. If price has a lower wick which sweeps the last bearish candle, it's a great. If price has no lower wick, then this doesn't impact the reliability of order block. It will also be a order block if price has no lower wick. So the last bearish candlestick before the up move, which was engulfed by the first bullish candlestick, is marked as the bullish order block, and this level act as a support in price. So we try to find the bullish entries, I mean buy entries from this area. Next we have ICT bearish order block. It is basically the opposite of bullish order block. In bullish order block we have the last bearish candlestick. Here we have the last bullish candlestick before the, here we can say downside move, not upside, before the downside move, which was engulfed by the first bearish candlestick. Now the last bullish candlestick will be engulfed by the first bearish candlestick. So the last bullish candlestick will be marked as the bearish order block. So how does we draw it? You can see we have this up move. We have 1, 2, and 3 candlesticks here. This one we can say the last bullish candlestick because the bullish move has ended here and the first bearish candle has formed here. That's why this will be marked as the last bullish candlestick, and this will be the first bearish candlestick. Now, how do we see that the last bullish candlestick has been engulfed by the first bearish candlestick? We can see that price has closed below the low of the last bullish candlestick. That's why we can say that the first bearish candlestick has engulfed the last bullish candlestick. So now we will mark the last bullish candlestick hole with the wick as a bearish order block. This area will be marked as bearish order block. Now what price can do? Price can retest this area in the very next candlestick, or price can go down and test this area later. Whenever price tests this area, we will be seller from here, we will look to sell from here. That's how we trade the order block. Let's have some real market examples to see the order blocks. Now here you can see we have this candlestick, the last bearish candlestick, the two candlestick bearish, and this one is the last bearish candlestick because the after this candle we saw a bullish candlestick. Now price has broken above the bullish candlestick. That's why this candlestick is marked as the bullish order block, and price retraces to this candlestick again into the area of bullish order block, and price moves from this area to the upside. Another example, we can look for the order block, bearish order block here. You can see that we have a last bullish candlestick. Why this is the last? Because we have a first bearish candlestick after that. I mean, bullish move has ended here. Now the price has engulfed this candle. I mean, the bullish candlestick low has been broken by the bearish candlestick. Now when price moves to this area, the area for the order block, retest the order block, we can see the sell off from here, we can see the sell off from here. The order block will be valid until price closes outside the area of order block. I mean, we have this order block high. If price breaks this high, the order block will be invalid. And here we have the order block low. If price breaks the low of this order block, we can say the order block is now invalid. But until price is holding the order block level, order block will be valid. Now here you can see we have another bearish order block. Price closed below the last bullish candle, and it became the bearish order block. Price retest the order block and fell off from here. And here we have another bearish order block. Price closed below the bullish candlestick, engulfing it with a large momentum candle. Price, when I retest this order block, price fell down. Okay, now here we have a bullish order block. You can see this is a bullish order block. The first candlestick of the bullish move has closed above the bearish candlestick high. This became the order block to the buy side bullish order block, and price has tested it two times, and this is acting as a great support till now. So this is how you mark the order block. In this video we studied how to identify the order blocks on chart. In the later video, we will be discussing which order block is valid, how to trade the order block, how to pick a valid order block, and how to trade the valid order block. Because we have so many order blocks on a chart, we don't trade each and every order block. That's why we need to identify which order block is tradable. If you like the video, do comment, and if you have any question, you can comment, and I will make video for you guys. I wish you good luck for your trading. Take care. Goodbye.